Hello and welcome to the History of Bangalore. I'm Ramjee Chandran here with episode 124 of season 3. This is part 2 of the episodes on the aftermath of the Treaty of Seringapatam. In the last episode, I set out the balance sheet of Mysore after the treaty, the ledgers of what Mysore had lost and retained. Half the territory, considerably more than half the sources of income. And on top of that, incurred a liability, an obligation to pay 3 crore 30 lakh rupees with 2 of Tipu Sultan's sons held at Madras as security for it. And Tipu Sultan met this obligation without delay. So this episode asks the second question: how do we assess how much money that really was and where did that money come from? But speaking of such matters, I will take a moment to tell my sponsors, the Prestige Group, that I'm grateful for their corporate support. That is how I'm even able to create this podcast. Building cities one landmark at a time, they transform dreams into reality. You can be a part of the future. Simply add prestige to your life. When studying the financials of a company or a country, same thing, what we are really doing is to look at how investable that entity is. And that means studying not only how much money they have or assets like land, but also their ability to keep increasing their inherent value. So when we encounter a situation like the one Tipu did in 1792, which in this case was that obligation to pay the British 3 crore and 30 lakhs, we try to find out exactly what that amount meant and what it was worth at the time. Most historical accounts I have read mention this amount, and then they move on to other political matters. But as I said, I wondered, what did that sum mean to Tipu, and importantly, what did it mean to the British? How significant was this amount of money? So let's peel back the layers to see. 3 crores and 30 lakh rupees. It's a figure that slides past the year without really landing. Curious, what does that mean in present value? Meaning, what was 3 crore rupees in 1792 worth today? And as I dug into it, I discovered that not only was it not a small amount, but in its time it was something like the entire annual budget of a European country. Now, here's the fun stuff. Here's how the math plays out. M.H. Gopal, the economic historian, in his 1971 study, Tipu Sultan's Mysore, an economic study, offers a conversion for the period. Now he does some math. To boil down Gopal's analysis to one statement, he reckons that 3 crore rupees was 3 million pounds sterling at the rate of 1 pound equals 10 rupees, which puts the full indemnity at something over 3,300,000 pounds. So what is the worth of that today? The typical method of calculating things, like the real exchange rate between currencies or nations, like for example, what does $10 really mean in America versus what $10 can buy in India, for instance, is called the purchasing power parity, and other inflationary methods to calculate what was a salary of 1 lakh rupees 10 years ago versus what is it today. That is calculated by methods like the Consumer Purchasing Power Inflation Adjusted Index, or CPI. But the CPI is not really relevant over a period of more than 200 years for obvious reasons. The more elegant method of trying to figure out the 2026 value of 1792 money was proposed by the economic historian Stephen Broadberry and his colleagues, who spent years reconstructing British national income going back centuries. Their method is simple and, as I said, rather elegant. Instead of asking what a basket of goods cost then and what it costs now, which cannot possibly work over 200 years because the basket itself changes, it asks a different question. What share of a whole economy did a certain amount of money represent? Interesting. Broadberry and his gang put the British economic output, or GDP if you like, in the late 18th century, which is around the time of the Treaty of Seringapatam, at somewhere around 200 million pounds a year. Now, I know it doesn't seem like much when you think of it today, but it was 200 million pounds 230 years ago. Now, that was the annual production, the entire annual production of Great Britain, its navy, its colonies, its factories, all counted in. Against that, the money that Tipu Sultan was going to hand over comes to something between 1.5 to 1.75% of that calculation of Britain's yearly output. Now, it feels hard to accept that one payment from Mysore could be worth 1.5% of the GDP of Britain in 1792. To understand what that would translate to in present-day money, or present value as economists call it, we simply need to apply Broadberry's method to the British economy today. Now, the British economy runs at about 3.15 trillion pounds sterling today. Even if we take it as just 1.5% is roughly 45 billion pounds sterling. That was the estimation of what Tipu Sultan had to pay to the British, and against which his sons were held hostage. When the money is viewed as a percentage of GDP, it's a more telling measure of value than any other indices. The fact that Mysore agreed to pay this amount and carry on with the rest of their life is also testament to the size of the Mysore economy when you think about it. Unfortunately, we don't have as plausible a measure of the size of the Mysore economy at the time, in contrast to what we know and have learned about Western economies. And this is not surprising, given that the Western commitment, some might say obsession, to recording everything is something from which we all benefit. What the comparison does tell us is the scale of the prize. This was not a fine levied on a beaten neighbor or some kind of indemnity that somebody had to pay for war costs. This was one of the largest and richest economies at the time, seeking a sum of money that made sense to them from an economy the size of which we can't measure, but we do know it was large enough to be the object of desire for several people in the world. I am talking about the British and Mysore, respectively, of course. The other side of the argument is that British economists of the day in the late 18th century would not have missed such an assessment of Mysore's economy, and if anything, it is logical that it would have increased British resolve to annex the Mysore kingdom at some point fairly soon. This is a point about which I will discuss either in this episode, or I can't remember if I'm going to do it in the next episode. Anyway, that's coming up. After a great deal of negotiations in a tent where the Vakils of Mysore, Hyderabad and Marathas, as well as the representatives of the British were all huddled, it started with the British asking for 6 crore, double the amount. This was vigorously opposed by Ghulam Ali and the rest of the Mysore team, who decided eventually to show the details of the Mysore treasury to the British. This was done because they wanted to prove that they didn't have the money to pay 6 crore. It was after a study of these records that Cornwallis eventually agreed to Mysore's offer of a reduced demand of 3 crore, with 30 lakhs tagged for cost, and that itself was reduced from the 60 lakhs that the British demanded first. Now, I find this offer of Mysore to submit accounts to the British to be interesting, intriguing even. It tells us that the Mysore treasury accounts were available for inspection in some comprehensible written form, and importantly portable form, such that the British could invite their experts to inspect the records. Now, these records never became matters of public record, such as the British budgets that had to be presented to a democratically elected parliament. But in a functioning monarchy, the line between what belongs to the state and what belongs to the king is thin, if it even exists. Besides, there were the inevitable and expected arguments from the British Indian allies, the Marathas and Hyderabad, saying that the Mysore accountants had falsified the books to show a smaller value. But these arguments were said and stated and then overcome, and finally Cornwallis agreed to these terms: 3 crores indemnity, 30 lakhs costs. Now here's what the treaty says, and I quote, "Lord Cornwallis, having deeply considered the offer they had made and consulted the representatives of the allies, having also duly considered their solemn averment of the possibility of Tipu's paying more than he had offered, and their proposal of showing to competent persons their treasury and accounts, and being averse to press too severe terms, he was willing to accept the offer that they had made." Now, as for how this money was supposed to have been paid, The treaty left no room for interpretation, and the term that was used to describe it was ready money. Ready money was 18th century commercial speak for cash in hand, payment made immediately and in full, as distinct from payment on credit or bill of exchange or in installments or in kind. The acceptable forms of payment were also specified as rupees, pagodas, or gold mohurs, and that excluded any settlement in jewels or goods. And that was now the sum of Tipu's obligation. He had agreed to pay this amount to the British. How they would use it or how they would share it was of no consequence or concern to Tipu, but there was one matter of both concern and consequence, and that was that he had to hand over 2 of his sons to the British as collateral security until he could fulfill his obligations. And as you know, there's no father in the world who likes to be put in that position, but Tipu was. And now for a quick commercial break, and when I return, let's take a look at how Tipu managed to pay such a staggering ransom. Right after this. The question that remained now was that Tipu would have to come up with the money to pay the British. Consider what that meant in practical terms. A ruler who owes money and cannot pay has a set of ordinary options available to him. He can borrow against next year's revenues. He can delay and plead a bad harvest, for example. He can renegotiate and gamble that his creditor would rather be paid slowly than not be paid at all. Or he can simply default and dare the creditor to do something about it. Every one of those options was closed to Tipu Sultan because of the boys. Delay meant the boys stayed in Madras. Default meant they would never come home at all. So the question is not whether Tipu paid, he paid. The challenge was how a kingdom that had lost more than half its income-generating assets would find 3 crore and 30 lakhs inside 2 years. But yet, Tipu wasted no time in meeting his obligations. He wanted his sons back, and he wanted to rebuild his position after getting rid of all his obligations to the British and starting over. So, in fact, he began fulfilling his obligations even before he was obliged to begin fulfilling his obligations. On the 28th of February 1792, just 5 days after the preliminary articles had been sealed, and even more than a fortnight before the Treaty of Seringapatam was even signed, which was the 18th of March, Tipu had remitted just over 1 crore and 9 lakh rupees to the camp of the British. That was roughly a third of the entire sum, handed over even before the document demanded that it formally existed. For what happened next? The fullest account again comes from the economic historian M.H. Gopal, and his handling of this entire saga is worth pausing upon because Gopal is not simply reporting. He was actually arbitrating between 2 competing versions of the same event in historical records. The first version, which was current in the period, held that the entire 3 crore 30 lakhs was levied as a tax on Tipu's subjects, the whole sum extracted from the population and extracted on top of the ordinary taxes that they were already paying. But Gopal rejects this. He says in as many words that this is not being fair to Tipu, and besides, it was highly improbable. The arithmetic makes the case on its own. The kingdom had just lost the provinces that generated the largest part of its income, revenues, and then to raise 3 crores from what was left in 2 years purely by taxing the survivors, that is not a heavy burden. That's a physical impossibility. There was not that much money in whatever districts were left over to take from simple taxes. So definitely that possibility should be relegated to the dustbin. The second version, the one that M.H. Gopal prefers, comes from Colonel Mark Wilkes. Now, he was a British officer who served as the first resident of Mysore after the kingdom finally fell, and who wrote what became the standard 19th century history of the Kingdom of Mysore. It's worth being clear about what all this means, even if the subject of financials is always something of a murky thing. The internal finances of Tipu Sultan's court at the lowest moment of his reign reaches us principally through this British officer, Mark Wilkes, writing after the British had won. So he's not a neutral witness. He is the best witness that we have. Gopal reads him closely, and where the figures do not hold, corrects him. and I'm going to try and jump into the arguments wherever I can myself. Wilkes divides the burden three ways. First, 110 lakhs, 1 crore and 10, from Tipu Sultan himself, out of his own resources and the state treasury, that's like money sitting around. 60 lakhs was drawn from the army, and 160 lakhs from the subjects of the state and collected from every part of the country that was left. 110 plus 60 plus 160, 330 lakhs, or 3 crores and 30 lakhs, the whole sum. Sometimes eyebrows are raised about the business of raising 60 lakhs from the army, and that needs to be explained in the sense of the culture of the time. The army share carried a name. It's called Nazrana. A Nazrana is a gift, specifically a ceremonial offering made by an inferior to a superior, like a courtier to a king or a vassal to an overlord. In ordinary times, it is voluntary, or near enough to be voluntary, such that the distinction is polite. It was not a gift. Now, Mark Wilkes had a theory that he put down in writing. According to him, the Mysore troops had already taken a pay cut. Now, he said, they were being paid for 10 months of the year rather than 12. And now, it was going to be cut down to 7 months' salary for the whole year. Gopal checks that figure, and he doesn't agree with it. The Mysore army had been on 9 months' pay, not 10, first of all. So the reduction removed 2 months' pay every year. And that rate, the 60 lakhs, came in roughly 2.5 years, which places the last of it in the middle of 1794. The soldiers who had fought the war and lost it were made to fund the penalty for having lost the war. Now, this might seem like it was coming out of wages that were already thin, and that too spread over 2.5 years. But the fact of the matter remains that the way that the army was paid and handled was a little different from every other subject of the kingdom. For example, if everything went well, the army would be the first people to receive the reward. So maybe in the day there was some kind of a balance that if they lost the war, then they had to foot part of the bill. Whatever it was, that's what happened. 60 lakhs paid by the army, Nazrana or otherwise. The remaining crore and 60 lakhs fell on everybody else in the kingdom. Now that mechanism is more specific than simple overtaxation. The distribution of it was drawn up by the heads of the civil departments, which is to say, by the very men who were themselves liable for a share of it. Their own contributions were duly computed. They were entered in the accounts as paid. And then the money then was made up by collecting an excess from the districts over and above what those districts had been assessed for in the books. So officials assessed themselves on paper and then passed the real weight downwards. Again, the fairness is something that seems horrible from today's day and age, but we don't really have what the nuances of the culture of the day demanded. It, however, was accepted and life went on. Below that, the collection itself was pressed hard. Now let's understand what that means. The state, that's a Mysore kingdom, raised the value of the currency. Now, the currency at the time was a gold coin, and no matter what they called it or who minted the coin, 3.4 grams of gold, call it a Kantiraya, Hana, Varaha, anything that you wanted to call it, or a pagoda as the British called it, it was the gold coin in which revenue was reckoned. And this meant that a cultivator handing over some nominal assessment was in fact handing over more than that. A tax increase that doesn't look like a tax increase. If you didn't quite understand what that meant, let it go. I had great trouble trying to get to it myself, but I think that it would take too long for me to get into it and explain it in full. Suffice to say that there was a tax and everyone in the kingdom had to pay it. So it fell on every part of the kingdom, which means it fell on Bangalore too. Bangalore, as we know, was the commercial heart of what remained of Mysore, and the districts around it were among the most productive that Tipu still held. And it worked. The last installment, if you like, was delivered in 1794, and the sons, Abdul Khalik and Muizuddin, came home. But here is what I find the most striking thing in this entire account. Every rupee of it was raised inside Mysore from the treasury, from the army, from the subjects. 110, 60, 160, and the three figures sum exactly to the whole 3 crore 30 lakhs. Not one anna of that was borrowed. What's the significance of that? Now let me jump forward a few years, because the contrast illustrates something about these two economies, Mysore and British, that nothing else quite does. The East India Company, which was the cover for the British, if you like, fought its Indian wars on credit. And a great deal of that credit was from Indian creditors. Remember, people like the Jagat Seths and the others were funding the British for all their wars. The banking houses of the subcontinents they supplied the hundis, the bills of exchange, that allowed the British armies to pay their troops and feed the bullocks hundreds of miles from any base. Within a decade of this treaty, under Richard Wellesley, who was the Governor General at the time, the company's debt in India would more than triple. It came close to breaking the East India Company altogether. So hold the two ledgers side by side for a minute, Mysore and British. The British were conquering India substantially on borrowed money, much of it borrowed from Indians. And Mysore paid for its own defeat in cash. That is not the story we are usually told. It's not that we're told an alternate story, but we're not told that part of the story at all. Well, the usual story framed by the British authorities has it that this oriental despot called Tipu Sultan was bleeding his subjects, while a commercial corporation brought orderly administration and solid accounts to the land. The finances suggest something closer to the reverse. This so-called despot paid all the money up front, and the British ran on debt that they could barely service. Tipu Sultan had all his sons back, and all his debts were cleared, and all the British had cleared out. It was 1794, and he would have 5 years in front of him before he was killed, but he wouldn't know that. In the next episode, I will talk about what Tipu did with the 7 years between the Treaty of Seringapatam and his death. That's coming up next. I am Ramjee Chandran, and this is the history of Bangalore.